Hello everyone and welcome to another options trading educational video from OptionsPath. Today we're going to address a question we get a lot from options traders, especially those just starting out, which is which underlying based on the S&P 500 benchmark stock index is better to trade, SPX or SPY? Well, the answer to this age-old SPX versus SPY question really depends on a few different factors, along with your specific situation. But before we address those factors, let's first provide some quick and basic definitions and differences. Now, the SPX represents the actual price index of all S&P 500 stocks. Essentially, it's a mathematical measure of the index's components. So when you trade SPX options, the underlyings of those options are the individual stocks. In contrast, the SPY is an exchange-traded fund that tracks the price of the S&P 500 index. When you trade SPY options, the underlying is the SPY fund. The obvious similarities are that both the SPX and SPY are derived from and based on S&P 500 stock prices, and that both are widely traded by options traders. But that's pretty much where their similarities end. Now here are some of their key differences that could make a major impact on your options trading. Number one, exercise. Like most U.S. equity options, SPY options are American-style contracts, which means that they can be exercised at any point, even before expiration. SPX options, on the other hand, are European-style, which means that they cannot be exercised early. Settlement. Also like most U.S. equity options, SPY options contracts are settled using the equivalent shares of the underlying ETF, usually only when the options are in the money. And this results in actual assignment of underlying SPY positions. In contrast, SPX options are cash settled only, which means that in-the-money options positions are not turned into underlying positions. Rather, they're settled immediately after expiration in a cash transaction. Liquidity. SPY options are by far the most widely traded and most liquid contracts traded on the U.S. equity options exchanges. Among other implications of this, the bid-ask spreads on SPY options are usually exceptionally narrow. While SPX options are also widely traded, they're not traded nearly as heavily as SPY. Also, a great deal of SPX options transactions still occur in the physical trading pits. As one result of these conditions, bid-ask spreads on SPX options can often be disproportionately wide when compared with SPY options. Expirations. SPY has many different weekly, monthly, and quarterly expiration dates available for trading at any given time. But SPX has even more expiration dates available, amounting to as many as 3 distinct expiration days every week during most weeks. At the same time, though, it should be carefully noted that SPX option settlement for the monthly contracts actually occurs on Friday morning, which means that the last day for trading monthly SPX options is the third Thursday of every month instead of Friday. This can confuse many options traders as well as create significant issues for borderline options positions on SPX. Size. Perhaps the most obvious difference is the size or market value of both underlying instruments as well as their options contracts. The value of SPX and its options premiums are roughly 10 times that of SPY. To give a quick example, at the current time of this video, the price of SPX is now at 2263.79, while SPY or SPY is at 225.71. Taxes. Finally, another important consideration in the weighing of SPX versus SPY is in the way they're treated for U.S. tax purposes. For SPX index options held less than a year, 60% of the capital gains are taxed at the lower long-term rate, while only 40% are taxed at the higher short-term rate. In contrast, SPY options are treated like any other equity options trades, where positions held for less than a year are taxed entirely at the higher short-term capital gains rates. Please consult a qualified tax advisor or accountant for more information. So after all of these factors and differences are taken into consideration, what is the answer to the SPX versus SPY question? As mentioned, it really depends on one's specific situation, but here's a rough breakdown. In terms of taxes, the potential benefits of SPX over SPY are rather clear across the board, especially for traders who generally hold positions for less than a year. As far as liquidity and bid-ask spreads are concerned, on the other hand, SPY wins out pretty universally. When it comes to market value or size of the options contracts, much will depend on the size of one's trading account and positions. Traders with smaller accounts are often only able to trade the smaller SPY due to the prohibitively large size of SPX. In contrast, traders who place larger trades often find that the smaller size of SPY leads to the need for a much higher number of contracts traded, which results in exorbitantly higher commissions and fees. The SPY's American-style early exercise capability generally provides more flexibility for options buyers, but can be a significant negative for options sellers. On the whole, options sellers are much more comfortable without the possibility of being surprised by a buyer's early exercise of options. This makes the SPX European-style contracts, along with cash settlement, the clear choice for options sellers. Now, options settlement goes hand in hand with exercise. Many options traders don't like to bother with actually taking positions in the underlying. For this reason, SPX's cash settlement is generally preferred over SPY's more conventional settlement with underlying positions. This is especially the case for many options sellers who often do not want to be assigned positions in the underlying. The issue of expiration dates is a mixed bag and not as important of a concern for those deciding between trading SPX versus SPY options. Although SPX's more frequent expiration dates provides more flexibility to traders, monthly options traders should be wary of SPX's unconventional monthly expirations. So there you have it, just a quick and simple video on trading SPX versus SPY options. Hope you found it useful. We'll have plenty more instructional videos on trading options going forward. From all of us at OptionsPath, thank you so much and have a great day.